Hello, everybody. My name is Tanner, your mortgage expert when it comes to your investment property purchase. Whether you are doing a DSCR loan, a bridge loan, hard money lending, private money lending, or fix and flip, I'm your source to accomplish your funding goals. But in today's topic, everybody's favorite question, what is the rate of a DSCR loan? So let's just jump in and go over all the key components of how the pricing takes place with DSCR loans nationwide. I will be as precise as possible, but I want to touch base into all the important components of this very important question. So, first off, why DSCR loan rates are not one size fits all. One of the most common questions we hear from investors is, and I get this question almost every day from investor, what's the rate? It sounds simple, but with DSCR, debt service coverage ratio loans, the answer is not always straightforward. Unlike traditional mortgages, DSCR loan pricing depends on multiple moving parts. That means the rate you hear on a quick call is only an estimate, not a final number. Let's break it down in simple terms. Why it's hard to quote an exact DSCR rate up front. At the beginning of a loan process, there are several unknowns. Lenders need to review key details before they can finalize your pricing. We're always happy to give you a realistic range, but your final rate may adjust slightly up or down depending on the full picture. Here are some key factors that affect your DSCR loan rate. Number one would be your credit score. Your credit profile is one of the biggest drivers of your rate. Lenders typically use the middle score from TransUnion, Equifax, and Experian. Higher score equals better pricing. Lower score equals higher rate adjustments. Number two, your cash flow, DSCR ratio. This is the heart of a DSCR loan. The lender compares rental income versus the monthly property expenses, principal, interest, taxes, and insurance, and HOA. If rent covers or exceeds expenses, you'll get a better rate. If rent falls short, higher pricing adjustments. Number three, loan to value. How much you're borrowing compared to the property value matters. Lower LTV equals more down payment or equity equals better rate. Higher LTV, higher risk to the lender, higher rate. Number four, property type and condition. Not all properties are priced the same. For example, single-family homes, best pricing, condos, short-term rentals, 2 to 4 units, slightly higher rates. Unique or rural properties, additional adjustments. Number 5, payment history, last 24 months. Lenders will review your mortgage payment history, rental history. Any late payments can increase your rate. Number 6, this is very important, the appraisal results. The appraisal impacts your deal more than most people realize. It determines property value, market rent used for DSCR calculation. If value or rent comes in lower than expected, pricing may change. Number 7, insurance and property cost. Your final monthly payment depends on homeowner's insurance, property taxes, HOA if applicable. Higher costs can affect your DSCR ratio, which in return affects your rate. Number 8, title and property condition. If the title report shows issues or the property has concerns, lenders may adjust pricing, add conditions, or delay closing. Number 9, loan size. Smaller loan amounts often carry slightly higher rates compared to larger loans. Number 10, prepayment penalty options. Many DSCR loans offer different prepayment penalty structures. 0 year equals no penalty but higher rate. 3 to 5 year penalty, lower rate. You often trade flexibility for a better rate. Can your rate change after you lock it? This is very important. Even if you lock your rate early, adjustments can still happen if credit changes, appraisals come in different, rent or DSCR changes, loan structure changes. The final rate is confirmed once all major components are verified. What should you expect as a borrower? Ask for a rate range, not a fixed number. Understand that pricing is custom to your specific scenario. Work with a loan expert who explains the why, not just the rate. Final thoughts. DSCR loans are powerful tools for real estate investors, but they are not cookie cutter loans. The interest rate depends on a full picture of the deal, not just a quick conversation. At Sky Hill Mortgage, we focus on giving you accurate expectations up front, explaining every adjustment clearly, and helping you structure your loan for the best possible outcome. Have any questions about your DSCR loan scenario? If you're purchasing or refinancing an investment property and want a clear, honest rate estimate, reach out to me anytime. In my experience working with DSCR clients nationwide, they all are seeking clarification on how pricing works. Let me personalize your scenario to the best expectations. One of the biggest mistakes I see borrowers make is they do not talk to the right LO. Feel free to give me a call at 813-568-2291 or call my dad Jem at 813-919-9925 or visit us on the web at www.mortgageskyhill.com. We'd be more than happy to walk with you and get the job done. Anyways, have a great day and take care.